Hey everybody, and welcome back to another episode of the Indy Investor Pod. I got Dave and Sterling back with me again today, and we're gonna have a little battle royale here on this episode and see which one of our real estate investing strategies is the most conducive for our market right now. It's a hot market, it's a crazy market, something that a lot of us really haven't even seen. We've been through some ups and downs in the past and things like that, but this is something that's a little bit different from everything that we're seeing and things. But I wanted to kind of get into with these guys a little bit of whether it's wholesaling or whether it's flipping or whether it's buy and hold, or even just other investment strategies as well as private money lending, note holding, any of that kind of stuff. What is really working and what should you maybe be focusing on right now in the market with just like this? I've had a lot of conversations with investors that are, I'm a buy and hold investor, but I can't find anything that works for the numbers. So I'm just going to flip right now. Or, I'm just going to try to wholesale everything off and whatever. So all of us we have businesses and we're all being successful right now. So it's all working in this market. So I really kind of just like to pick your guys' brains a little bit about like, hey, what are you guys seeing? What's maybe working well for you guys in this market the way it is right now, even though it might be a little bit different. Or Sterling's like, no, nobody should be buying a buy and hold right now. Everybody should be flipping or wholesaling or whatever it is. So, Dave, when it comes to just flipping in this market, is that the best thing that somebody could be doing right now? Or is it just with the price that you guys are paying for properties and the price of, with materials and things? Luckily, I think the price of materials are going to start coming down from what I've seen on a couple of reports this week. But is flipping the best thing that somebody can be doing right now, or are you paying too much for cost and for properties right now? What do you think?
Well, I don't. I mean, we've been finding deals. We don't really think we've been paying too much.
Yeah.
I mean, we're playing at the market, and we're paying at numbers. I'm paying more in areas that I don't have to reinvent the wheel to put them back out.
Yeah.
I think where I see a lot of flippers overpaying is in these projects that's $80, $90, $100,000 to put back in service.
Yeah.
Because I don't know how good you are, but it seems like if I have a scope of work at 100, by the time I'm done, I'm 125, I'm 130.
Mm-hmm.
Because of materials, because of labor, because of delays, because of interest holding costs. So consequently, we've been looking at and doing a lot of deals where before, if we could make $25,000 on a house, that's a fair profit for us. Well, what we can do now is pay a little more for these vinyl village houses because we can get them back in service in 45, 60 days.
Yep.
And have it back on the market. And we know it's going to sell for whatever top dollar is. The people are still looking at, residential value, but yet they still, they want to, it's like, if flippers buy at the comps today, then they probably can't buy the vinyl village. But we can look at it if you know your product that you're going to put out. Every comp on a house that I'm going to put out, I know I can sell it for $10,000, maybe $15,000 over what a 6-month-old appraisal says.
Yep. Mm-hmm.
On a comp. So I can look at wholesalers deals that they bring me thinking, oh man, I would never pay that for that. Well, now, okay, let me take a little different look because I might pay 130 and I'm only going to make 20. But I know what my costs are. I know what my time frame is, and I know I can get that. So, if you're in and out of a deal in 90 days and you're all in at 150 and you make 25, then for your investor, you've made almost a 30% return for that guy.
Yeah. Mm-hmm.
On it. So we're just looking at, people say, well, I can't buy from wholesalers. I said, well, I've bought quite a few from wholesalers, but we're looking at, we're looking at different eyes than we did 6 months ago.
Yeah.
Like we just bought one in the Windsor Park area. I dislike Windsor Park. I made it very clear.
So I'm pretty sure you've bashed Windsor Park a couple times in this episode.
Yeah, I mean, and so I bought one, but now I have three strategies on it. I bought it in, I only paid, I should say only $75,000, but the deal right across the street through the MLS just wholesaled at 106. That's the same house as mine.
Yeah.
So now I've got a strategy where I can wholesale and leave room for a flipper to go in and complete that house and maybe make 60 or 70. But on the flip side of it is, okay, do I do the house and go ahead and try to make $80,000 on the house because I can't find other houses.
Right.
So we just look at different strategies that we're going on with these particular houses. So, the market's really good. You just have to adjust your vision to it.
Yeah, that's exactly right. Like we've tried to stay away from, I've kind of actually steered away from more of those bigger projects as well, even just trying to wholesale those because I'm like, I don't know, like, I don't feel right. I feel like people that are doing maybe those quicker flips and things like that are having a little bit more success. And the same thing of like kind of adjusting your strategy a little bit where Dave might usually pick up a property and, maybe spend 6 months on it and make, $80,000. He might have to pick up 2 or 3 just cool little quick ones that he can get out within 90 days and make 20 a piece on or something like that. Right. Adjusting your strategy is what you want to do I think is key in a market like this. And just adjusting your numbers. I mean, we're going over, I have data from the last, 8 years on like what we've bought and sold in every single neighborhood here in Indianapolis, but I can't use those numbers. Right. I need to look at like the numbers, like what's happened in the last 3 months, 6 months. What happened?
I wouldn't use those numbers.
Gear your profit. If I'm going to be in a deal 6 months, I want to make, effectively try to make $15,000 a month.
Yeah.
To be in that deal. Mm-hmm. So now if I've got a deal that I can be in and out of in 60 days, then why is 25,000 not a good number?
Right.
Mm-hmm.
Yeah. So, and then usually you can usually operate a couple of those at a time too, is the big thing. And it's a lot easier to operate a couple of those versus a couple of the bigger ones.
I don't need a skilled crew to do that house. So I get them done at a better price.
Yep.
Right.
So, exactly. So Sterling, how about for you, from your standpoint of like all these people that are, with all we heard was the burr strategy last year. That was the big thing. Are they still able to do that this year? Or is it just like, no, just your straight buy and hold that are buying now and it's going to be good for the next 20 years? That's all they care about. Are they the ones being successful, or can we still burr? Can that still happen? Like what's going on, man?
Yeah. I mean, I think, I absolutely think buy and hold is always the best strategy. So, I would debate with anybody about it, but I think real estate is meant to be held. All right. So now I think the burr strategy is just it's just a strategy, of buy and hold. The idea is to buy, hold the asset, let real estate do what it does, which is appreciate and get cash flow. And I think you can absolutely do that in the market. This is, history only repeats itself. In 2007, when the bubble bursted, I mean, that thing's been appreciating since 1963. So all those years of just cash flow and appreciation, you were winning with. So I don't think this is any different inside of our market today, where since 2013, we've just been appreciating and building cash flow and things like that. I think that's the same thing. I think you're absolutely right, both of you, when you say you need to change your paradigm because there's different opportunities in different markets. When I first got into this 10 years ago, everybody hated duplexes. Like you could buy a duplex 10 years ago for like $25,000. That duplex now is worth $150,000 to $175,000, right? So that just tells you that there's a guru in California selling fish oil about different strategies, and that's no different in this market. Where I look at the opportunity though is not only in the buy and hold on the traditional sense, because I think traditional neighborhoods are going to improve and you're going to be able to cash flow. And I think deals like that are still happening every day. But where I look at it is kind of the commercial space. Those are when you start talking about buy and holds, you know, people are transient, right now. So do we think that people are going to stay transient forever? I think how people are working is forever change. But to say that they're going to be transient forever, I just don't think that. So if we're going to talk in the idea of buying low and selling high, then we need to look at where is the low at in our market. And I would say, and I'll argue that the low right now is on the commercial space when it comes to office space, when it comes to hospitality, when it comes to senior living, you know, different things like that is a low. So you can buy those things at a discounted rate than what you have been in the past, and you can make a pretty penny off of those things because those owners just want to get out. They've dealt with the last year and a half where vacancy and evictions are at moratoriums, and their restaurants are closing at an all-time high, which really sucks. But that is an investor's dream, right? Like to buy an asset that is undervalued, people want to get out of, and we can buy in at a lower discounted rate than what its value was years previously. So for me, I think buy and hold is the way to go. But buy and hold is such a broad sense of the word where, you know, right now I'm selling off half my portfolio because they're underperforming and undervalued. You know, they're going to be at the highest that they're ever going to be right now. Yeah. But the idea, where do I put it? Where I'm putting the money is where the low value things are. I think Dave is onto something good with his building that he's taken, you know, over and what he's done with it. I think people like Dave and the people that are looking at commercial are going to be the winners in the next 5 to 10 years.
Yeah. So Dave, let's talk about that note. I'm assuming, Sterling, you're talking about the co-working space, and things, because that's what we've seen over. That's been a huge transition where, you know, Sterling's talking about the, you know, commercial office space, like it's at a all-time low because people have realized like, oh, I don't need an office space to run my business. Instead, people are working from co-working spaces or from home or wherever. So Dave, let's jump into a little bit of that experience so far. And it's still kind of a little bit new to you and things like that. But what advantage do you think of, or just like how exciting are you about the possibility and just all the, you know, all the opportunity that you have with this new co-working space that you have and stuff, man?
Well, I mean, I bet a lot on this space, and with the thought it's a business that I can get in, and once I get it going, it will run itself. So it will be a retirement, you know, a retirement angle for me. Yeah. To not necessarily do the day-to-day with it. And when you look at a building that, you know, market rents for a building like a big commercial building or space like that, if it's just open regular space, you know, is $10, $11, $12 a foot is a good number. Well, then I've got a space that if I calculate it out for rental rates per space, you know, I'm pushing $50 to $55 a foot for that space. So I can, you know, 10x a space, I can 5x a space by solving a need versus, you know, doing the traditional way that people come in and try to run a business. You know, I can have a bar area, I can have outdoor space. So I can, you know, today, office, no matter where you're at, is about community as much as is a workspace. So we're trying to create a community. You know, we have mastermind real estate at our facility every Monday morning. You know, and you just can't buy that stuff out there. And so we're creating a space that lets somebody create more than a work outlet on it. And that's why I think spaces like this in the future. Sterling's space, you know, and I hope he's doing it, is when he finds a person that wants out of that rundown commercial space, you know, that he takes that owner and says, okay, listen, Mr. California investor, I want to trade your 5 houses for this space. The guy will take your houses at market. We get his at market, which is 50% undervalued. So you move them over there, and now you create value. I mean, that's the good investor, the good flipper, the good buy and hold guy. He's the guy that creates value. That's why Sterling's good at what he does, because he creates value for his, for his owners that's out of state. And he works with them on a consistent basis, and they're not hanging out there. They get to adapt to the marketplace in Indianapolis, which is all the time creates value, create opportunities in our space.
Yeah, I think that's where my industry has changed, right, over the last 10 years is the ability to find 10x opportunities, right? I think, for us, you can rent a house for, $600 for $800 to $1,000, but you can Airbnb that same house for $4,000 to $5,000, right? So there's an opening where you can arbitrage. And I talked to my wife, I'm like, maybe we just go to like our owners and be like, hey, you want your guaranteed rent? Just give it to us and we just arbitrage, their space, right? Because what does that do? And now they get what they want, which is value through rents, but we get what we want because now we're making profit off of something that we didn't necessarily have to put income in to do other than offsetting the space. So it's things like that I see as a great opportunity right now, where, when we start looking at how the world is going from blockchain to Uber to it's being able to utilize real estate as just a vehicle, and then understanding where the next kind of wave is going. And I think, the hospitality realm, I think, office spaces and how office spaces are going to differ from moving forward. I think senior living is going to look a lot different than what it did before, and being able to be on that front edge of being able to give those things and offer those services, those people are going to win.
Yeah, that's the, you mentioned that twice now, Sterling, is the, the assisted living facilities or, the senior living and things. And I think that's something that is kind of that next thing of like, okay, is this, how's this looking in Indianapolis? And I don't know of anybody right now that's doing it well and has kind of figured it out. But you have like a program like a Gene Garino out of Phoenix of what he's doing and, some of the southern markets and things like that. But here in Indianapolis, and Dave mentioned it too, it's all about community. So if you have an assisted living facility where you have a group of 5 or 6, seniors that are living in a house that, want to pay rent because they want to live together and they want that community and being a part of that. Also
Brian,
looking at it from, go ahead.
I know of a guy, a local that has built a assisted residential living.
Yeah.
He had 8 bedrooms, 8 baths, and he had $1 million in his facility. And he opened it full, and the average rent for the person was $7,400 a month.
Wow.
And
all you could do is laugh, like, what the?
Yeah. So what, Dave, what part of Indy is that in?
With the waiting list. I beg your pardon?
What part of Indy is that in?
That's in the north side of town.
North side. So, yeah. So, I mean, there's
86 in Meridian area.
Yeah.
Facility's beautiful, but, it's a 5,500 square foot facility. So he built it for $1 million. So that's almost $200 a foot to get everything complete that he wanted. But he's $7,200. He's $57,000 a month cash flow.
Yeah.
Trust me, it doesn't cost that much to run it.
Right. Yeah. So, and it's, I mean, that's where it is, like where my avatar for my seller of who I like is that, that senior person that the house is just, they can't keep up with it anymore, or they're going to go move into an assisted living facility themselves, or they're going to go move into a family or anything like that. Like that's one of my favorite sellers. Those are the people that I love working with and stuff like that. But we're at a time now too, where there's so many people that are in that category. And it's going to continue to just be more and more, just with the population growth over the years. There's going to be more and more people that need to kind of move out of their house because they can't take care of it or whatever it may be, that are falling into that category. So where are they going to go? So I think assisted living, like we just mentioned, I think it is a good opportunity for, for what you can get for your bang for your buck here in Indianapolis and stuff too. And certainly you just mentioned as well of like the, the Airbnb space. Like 5 years ago, I didn't think like, why would anybody come to Indianapolis for Airbnb?
Exactly,
Like
me
there
too.
are a ton of people that come to Indianapolis and stuff. And there's a lot of people that come out here. So what, up here in Hamilton County, like it's crazy of what you see is going on at like Grand Park of just all the, like there is
Absolutely.
always a tournament of some kind coming in here. And the people
We're there every weekend, I know.
Yeah. So
games start on Thursday at 8:00 in the morning. Like we don't got a job or something.
I had a buddy do an Airbnb in Speedway.
Mhm.
Did it first class, a little 1,200 square foot house.
Yeah.
Did it first class with the basement, the garage, and the house. And he's thinking, well, I can get, X number of dollars, $700 a night during the race weekend and those days. Well, he got it done, and he now has his unit booked, I think, through September at an average of $4,500 a month.
Yeah.
Yeah.
So the race is over, right? The racing, like it's going to happen.
And it's not
there.
Speedway. He rented it before Speedway.
Yeah.
People coming in for a 4-day seminar are tickled to death to pay $500 a night because it's twice as nice as the JR and it has security, relatively speaking.
Yeah.
COVID and all the other things. So
we have investors that
it's unbelievable the amount, as many mousetraps there are in Indianapolis.
Yeah. We have investors that now are going to like small town. I won't give away their market that they're doing it in just because how popular these podcasts are. I realize like they be hitting me up left and right like, Sterling, so you said, I'm like, oh crap.
I know. I got to figure out like 5 other small town markets like in the next couple of months.
Exactly. So I'm not going to give the name away of what market he's doing this in, but he's been really successful in this one market doing Airbnb. And it's the center of like the courthouse is right there. And it's no hotel within, I think he said like 15 miles or something like that.
Yeah.
And the one that is, I think it's one hotel and it's terrible. Like you don't want to stay there. You're going to get bed bugs. So he was like, he got a triplex and he was like, well, I can do an Airbnb, and the town was like, yes, let's do an Airbnb because all the like lawyers and people that come into town need a place to stay. And so now he's like building up these Airbnbs in these really traditionally rural areas that really doesn't have anything much more than that little kind of circumference there. But I say that to say not that you should run to wherever he's investing to put Airbnb. I say that to say how you're looking at a need and you're solving a problem for that area, and how being in the game those opportunities kind of come.
Yeah, it's one of those things we talk about all the time, and just finding the opportunity and finding your niche within that and stuff. And Sterling just mentioned that too. A lot of times these small towns are going to want to work with you because you're bringing something there. So if it's like the Madison, Indiana, where you can be along the river and they have their cool little festival every month and people are gathered in the main street, or you go to Winchester, Indiana, and they like just to visit Mrs. Wick's Pies or whatever it is. Yeah. Like there's stuff going on in all these little small towns. That's how my wife and I travel. Like when we travel, we don't want to stay in like the big city. We do that every now and then, but we want to find what's the cute little small town, and we'll go there and hang out and stuff. But there's a lot of people that are doing that. And, like I said too, a lot of the cities will work with you because they're going to bring it in, but there's people coming there anyway. Like you mentioned, just professionals too, that are a lawyer that's coming in town, or somebody that's coming in town for a wedding, for whatever it is. There's some things going on. So a lot of really good opportunity. Really good point, man. Dave, what do you, go ahead.
Can I say another thing that like, I think, inside of this market that, it's kind of get overpassed, but I think Dave does it, and I know you guys do it on a level. And that's really, I think as this market is kind of up and down and it's ever flowing, I think one of the things that people need to start looking at is how they can become a private investor, and how they can invest with like Simple Wholesaling or Dave Short or Sterling Davis, because that is an awesome way to be able to be insulated from some of these ebb and flows of what happens inside the market. And I don't think we talk about that enough. We talk about how they can be hands-on and how they can be in the grunt of it. But the best way, like one of the best ways right now to invest with people is going to a Brian and be like, hey man, what can you do with my X amount of dollars? Or Dave, like what flip can I kind of get on, and let Dave be the expert, and you just kind of get that residual money out there. You know what I mean?
I can talk about our business. I can talk about wholesaling, but my money's not parked in wholesaling. They're parked in that. My money's parked in like private money investing. That's what I want to be doing. I like to be as passive as possible when it comes to that stuff. And Sterling, I think that's a great opportunity and a great thing to bring in there, that where you can get some amazing returns right now, especially because people need money, because they, there's people that want to do flip projects. There's people that want to, maybe they want to buy that rental or buy 5 rentals right now and then refinance later, but they need some money to do it in the meantime, have some of that transactional funding and things. So I think there's a ton of opportunity in there for that as well. If you do have just some money that's sitting there and you're waiting for that next property to buy, but oh, I'm not going to buy anything in the next year, like use that money in some way and you can get some, whatever your some pretty high percentage returns on, depending on what that money's for, with maybe a couple points as well, or whatever it may be. So yeah, man, I think that's huge. So another, just on that same note too, is like one of my favorite strategies is just note investing and note holding as well. So, where we have such a great market right now of, being able to flip properties. Well, can you take that same property that maybe instead of just selling it for, $150,000 for that, cash price, or even, whether they finance it or not, and just getting paid out right there. Can you find somebody that you're okay holding that note for $150,000, but then just finance it to somebody with a sizable down payment, a good interest rate and stuff like that, be able to hold that note for the next 20, 25 years, I think is a great investment strategy as well. Dave, I know you've been on the side too, where you've bought some like non-performing notes and, made them work for you and doing some stuff like that. You want to speak to that a little bit of just kind of, the advantage that note investing brings to the investors out there as well?
Well, there's a lot of people when they talk about note investing feel they're uncomfortable going in non-performing. And non-performing are the notes that in today's world, if you buy a performing note, you're going to pay close to par value, or par meaning whatever the face value, whatever's owed on the loan, or maybe a modest discount to get a specific rate of 9-10%, where because we're able to massage the property, we might be able to buy that same $100,000 note because they haven't made payments for 6 months for $50,000. So we really bought an asset that might be worth $80,000 or $90,000 that's owed $100 on it, and we only have $50 in it. Well, guess what? What if we can get them to pay that loan off? What if we can get them to start making payments? So if they have a 7% loan at that 100 and you bought it for 50, guess what your rate is? It's 14%.
Yeah.
So if I, can get them to pay for a year at the rate at 14, I'm making 14, they're still paying 7. Guess what? I can call Brian Snyder and sell him that note in a year for $90,000. He thinks he has got a good rate of return at somewhere around 10, and he's got a 10% profit, and I've made $40,000 by just managing that note for a year.
Yeah. So we see it happen all the time with people. I mean, I take non-performing houses, non-performing mortgages, and turn them into something for other investors.
My best profit deal that I've ever had has been a non-performing note that we bought in Southern Indiana. It was a face value of $280. The guy hadn't made payments for over a year, and we bought the note for $90,000. And I just went up there and talked to him and said, "Do you want to move? Do you want to do? It's a great property." And I said, "What if I discount what you owe me at $280 down to $210? Can you go get a mortgage?" And he said, "Yeah, I can go get a mortgage." He went and got a mortgage 6 weeks later, and we made almost $120,000.
Paid you off in that 210? Wow. Yeah.
In 6 weeks.
Yeah.
And he said, "Well, why would you give me a $60,000 discount on my mortgage?"
Dave's like, no brainer.
It's a no-brainer,
Yeah.
So from that standpoint, that's why, I treat non-performing loans as future flips.
Yeah.
So I know I got to flip some way, shape, or form in a year. And the only thing that I would say to tell people who buy non-performings is, it's like anything, do your due diligence and put your eyes on it.
Yep.
You need to put your eyes on the house, not just, I mean, we bought mortgages in Columbus, Ohio, Cincinnati, Marysville, Indiana. Does anybody know where Marysville, Indiana is?
Yeah.
West Lafayette, Indiana. I mean, in Chicago. So, but Cleveland, it's just, as long as it's a 5-hour drive and it's a good deal on paper, I'll make the trip.
Yeah. And that's what you said, the key right there for what works for you on that stuff, Dave, is that you need to see the house. You need to see it. You need to be able to talk to them. You need to get your eyes on it and things like that. Versus, some people that are just trying to, like, some people might look at that as like, oh, I'm not going to do anything in Cleveland because I can't do it virtually. Well, it's within, Dave has picked a radius and he wants to stay within that because he needs to have some level of being able to get there, being able to operate within that distance. So that's awesome. So, fellas, anything else that we haven't mentioned today that you guys look at as like, hey, what's a good, just investment strategy over, that you see in a market like today?
I mean, you hear the craziest stuff, right? Like I hear people just buying houses off the MLS, posting it back on the MLS after they buy it, right? Like I haven't done that.
We say good strategies, Sterling. Come on.
I haven't done that strategy. Well, I look at it as like right now when we start looking at what's going on. Like I said, I'm selling off half my portfolio because some of my houses, I'm going to profit somewhere about 40 to 50,000 on the ones I'm selling. Well, I'm only making $100 to $150 on these per month. You can do the math. It's going to take me a very long time to be able to get that 50,000. And I have to ask myself, that's in the perfect world. That means the furnace won't go out, the roof won't go bad. So it just kind of makes sense because at the end of the day, we know logic says what goes up must come down. In the sense of if the market is high today, then it has to come down. And I've seen statistics that says that it's going to drop at 1.5% in the next month or something like that. Even at 1.5, that's great. That's 1.5 that we wouldn't have, right? So for me, I'm pulling that money. Lord willing, I can put it in a 1031 exchange and try to make it work, right? And if it doesn't, I'll put the money back in and with a little tax hit into another asset.
Yeah, that's what I was going to mention, is that the perfect opportunity right there to exchange 5 of those properties for a commercial space or whatever it may be for a 1031 exchange and stuff. So yeah, Dave, how about you? Anything else that we haven't necessarily mentioned today that you see out there?
It's fairly simple. But don't sit on the sidelines.
Yeah.
Go to work.
Mm-hmm.
And you don't have to have a lot of money in our world to go to work.
Right.
And, so there's stuff that can be done. It might not be simple wholesaling. It might not be somebody else, but there's transactions out there, and I have so many people that come to my classes and seminars and stuff. They get the knowledge and then sit on the sidelines.
Yeah.
And this is not the time to sit on the sidelines.
Yeah. No, I like it. Love it. Great advice. No, really, really appreciate all the insights today, fellas. Really good stuff. We're going to wrap this up here real quick and we'll get out of here. So yeah, that's what we're looking at today. Just like, what are some other things like in a hot market where people are saying just what Dave said, the opposite of, like, people are like, it's too hot. I can't do anything right now. I can't find a property. I can't do this. Like, find a way to get involved, whether it's even just using your money for something, partnering on something with anybody. Can you, sell some of your properties and get into something else or whatever it may be? There's a lot of opportunity out there. I know us three are going to take advantage of it because we love this type of market. We love what's going on right now. And things are going well. And Indianapolis is a great place to be able to do all of these things. So and that's why we want to, talk about it and show some love for the city of Indianapolis on here. So with that, that's a wrap for this episode of the Indy Investor Pod, and we will see you guys next time. Take care.